Today, based on client feedback, I will be reviewing the Gold Scalping AI MT5. Stick around to the end to see if this is a really good bot or just another MQL5 scam. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So the reason why I wanted to make this review is a client of ours at Prosperity Algo, has been telling me that he's had this bot since the beginning and he's been seeing really good results. And because of that, and because this gentleman is a experienced Forex trader, I thought it might be interesting just to kind of go through and see how it's working. And something which was interesting to me and also kind of a bit suspicious was that so far it's had a 100% win rate. And it's also making quite a few big AI claims. But clearly it's been having good performance for people. Therefore, I wanted to kind of dive down and see what it's actually doing. Is it a good bot? What's the strategy behind it? And really just kind of get to the bottom of the performance. So here we can see that he's name dropping a bunch of very fancy AI models here, like graph neural networks and reinforcement learning with proximal policy optimization. Once again, it's very hard to implement any of this stuff in MQL5, so I would venture that it's mostly just name dropping to get some purchases. But we can look at the other elements of this sales page to get an idea of how it actually works. And supposedly it trades the H1 time frame and it trades gold specifically, and it takes data from all time frames and it kind of does a top-down analysis as well. So interesting, okay. And supposedly it doesn't trade too much, and that has been back tested for several years using real ticks. So all sounds pretty solid. And now we can actually flip through these pictures to see if it gives us any more information. And all we're seeing is a beautiful back test which is going up, but not really a ton of information on the exact strategy, except that he's claiming that his very fancy AI models use a variety of different indicators to make a trading decision. But something which has been quite interesting is if you go to the sales page or the signal page here, we can see a 100% win rate to date. And usually I wouldn't be super trustful of a well-traded live signal because these signals are known to be fairly manipulated. But I've had customer of ours say that effectively they've been having similar results in their accounts. So that's kind of the paradox here. Looking at the sales page, I would typically be a bit suspicious, but then people are actually having good results and you can't really argue with results. So that's why I think it really calls for more of a deep dive. So what I've done in MQL5 today, or in the tester today, is I'm actually going to do a much more in-depth review than normal. Because what this thing is doing is that it's using enormous stop losses paired with extremely tight take profits. And I just wanted to go over some of the math today to show you guys what that actually entails and why we're seeing this kind of performance. So now here, let me just run a quick, full period back test for everybody so that you're able to see what it is we're dealing with here today. Let me just slide this over. There we go. So we can run a 1-year back test with the Gold Scalping AI on 8cap. And what you guys are going to see is that it's actually pretty fast. And that's a great sign because that typically means it's less likely to be a history reader. But the actual results is that it's getting, I believe, essentially a 100% win rate here, maybe high 90s. So really, really perfect equity curve. Here we're at a 98% win rate, and the profit trades are extremely small at around $1.66 in a $10,000 account. Granted, I'm using fairly low risk settings, but regardless, it's still a very, very small profit trade. So that's something which is kind of interesting to see here. And I believe we're trading with micro lots as well. If we go here and we can see, yes, we're trading with micro lots. So that would mean that the total contract value is the same as the price of gold. So the reason why this is interesting is that if we go back to the report, what I believe is happening here is he's using an absolutely enormous stop loss. And because of that, that's why we're seeing the 100% win rate. Let me walk you guys through the math here just to kind of show you why this is happening and why this is not exactly an amazing strategy either. Because what I find people don't always do is the randomness math when assessing an expert advisor. And really what matters in any sort of trading system is the edge over randomness. And how I would define the edge over randomness is look at whatever the break-even win rate is. Let's say our little bubble here was dead in the middle, and assuming we're in a perfect trading environment, no spreads, no commissions, no slippage. And if it were to hit the top 50% of the time, and it were to hit the bottom 50% of the time, and assuming this is a take profit and this is stop loss, we would break even. We would be at exactly zero. And in a perfectly random scenario, over a million trials, we would expect the top and the bottom to be hit roughly equal amounts of times, because that's exact randomness. If we have no edge and the top and the bottom are of equal distance from price, let's say it's in the middle, we should see a 50-50% split. However, once our little price bubble here starts to move and it gets closer to one level versus the other, all of a sudden the probabilities in a random scenario start to change. Because if we're way closer to the top, even if we have a completely random bubble, we're more likely to hit the top than we are to hit the bottom. And this is just basic randomness properties. And I'm sure you can prove this mathematically, but effectively what you should do is anytime you have a certain risk reward, you should calculate what the break-even win rate is. And that corresponds to the true random scenario, assuming no slippage commissions and market factors. So that's kind of interesting to do here as well, because if we have an insanely inverted risk reward, that means that obviously the win rate is going to be extremely high just through properties of randomness, even if there's no edge. So let me keep going through our presentation here. We can see that this thing had 92 trades in the back test, and the average profit trade here is extremely small at around $1.66. Because we're using micro lots, the stop loss value in dollars will also correspond to the total loss if you were to hit the stop loss. So the one takeaway from this slide here is look at the average profit trade of $1.66. Here we can now look at a visual backtest when it was running. I took this screenshot just so that we're able to see how big the stop loss really is. Because the strategy that this thing is running is that it's very, very rapidly scalping using a trailing stop loss. So as soon as we enter in profit, like within seconds, it scalps. And obviously that's going to result in a very, very small take profit. And depending on how high your spreads are, this might not even work. But effectively here we can see like what happens in the worst case scenario if it hits the stop loss. And that would be a $40 stop loss. And because this is micro lots, we're just trading one micro lot, we're actually going to lose 40 bucks. So that means that our risk reward here is when we win, we're going to make $1.66. When we lose, we're going to lose $40. So that means that here is our trading statistics. So that means for us to just break even, we need to win 96.02% of the time. And effectively, if we look at his live signal, he's only made 49 trades so far. That means that of that, if we were to multiply that by 4%, we should have seen roughly 2 losses. However, this is just under a perfect amount of trials. If you were to have 10,000 or 100,000 trials, we would expect to see that distribution. If you have so few trials, which is 49, you just might not see those 2 losses so far. So my concern here is that because it's just so inverted and he's using such a massive stop loss, it could very well be that he has absolutely no edge, and it's just that he just hasn't happened to hit his massive stop loss yet. That could very well be the case. One caveat I would add here is my client so far mentioned that sometimes it closes automatically by end of day, so it doesn't necessarily wait to hit the stop loss, so perhaps there is some degree of time filter going on here. Let me maybe go back to our inputs tab here to see if we see anything there. Hard stop range, stop trading, high impact news. These are more news parameters, chart parameters. So not seeing anything related to time, but to go back, my client has mentioned that there is perhaps a time-based close as well. So that could change those win rate math, but I would doubt that it's closing too aggressively, or else we just would not likely be seeing this performance here. So my takeaway here is that I don't think this is still a great system just because we haven't seen any losses, so we can't really assess the risk reward. That being said, it's not a history reader. There appears to be some thought out strategy here, and some people are having good results with it. So it's kind of an interesting middle ground. I personally wouldn't buy it, but some people have been having good results. Second of all, always do the win rate math. This is really important. Always look at the edge over randomness, because that's ultimately the basis of trading. You need to have positive expected value. So doing these calculations can really help you assess a bot in a much more accurate and logical manner. Guys, hope this video was helpful. Have yourselves a great day. Take care.